This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Wednesday, March 4th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here at May corn down 3 3/4 at 442 3/4. May soybeans are down 2 1/4 at 1168 1/4. And March Chicago wheat was down, May Chicago wheat was down 7 1/4 at 566 3/4. This morning we had an export sales announcement, 125,000 metric tons of corn to unknown destinations, and that was for 25. Good morning, fellas. Kind of more of the same here. You know, we continue to monitor outside markets. The conflict over there in Iran continues to go. We were talking this morning just about, some of the trickle down effects that we've seen here with regard to the Strait of Hormuz. I know President yesterday is looking at measures that will hopefully open up some travel and movement through there. But we're definitely seeing a pop in urea prices. We were talking this morning for the show. You're up over $250 a ton from December 4th. So just in 90 days, you're seeing a pretty good pop. And I know a lot of bids have been pulled across the country there. So with that, Dustin, maybe share a few thoughts here just on some things you've been looking at, and then we'll throw it around the room.
Yeah, thanks, Dan. Yeah, grains are starting out a little bit weaker here today. A lot of questions that we're getting just about, what does this, war with Iran mean for grain prices? And that's obviously the $1 million question for everybody. Energies are up quite a bit this week. So, we opened quite a bit higher Sunday night following this news, and we're up about 10% on the week for the lead month contract. And I don't think it's surprising that we hit highs in the D's 26 corn contract, given things like, like the urea price, for example. We still have to grow a crop this year. We still have rising gasoline prices. We have a positive correlation between corn and crude oil over the long run, maybe not more recent times. So all these things are definitely maybe a little bit friendly for corn. That's why we hit the highest price yesterday we had really since June of 2025. So what do we do about that is really the real question, I think. We know we have crop insurance. We know we have farm bill. We also know that as we start to get up to, let's say, 474 and above, the gap between there and somewhere in the lower fours, like 438, is about a 5% deductible from the spring price. That's probably where growers' risks really are. Like the bulk of their risk is that first 40 cents of downside. So our plans are measuring that, deciding how to improve that area. I'd like to still have, ability to have some dry powder in case this thing keeps going, because there's a reason why we hit the highest since June 2025 yesterday. I think the conversation definitely turns to be a much different conversation by the time we hit the end of the seasonal in May and June.
And it's interesting too. You look at, this morning equities are a little better. So Justin, you've mentioned it a number of times, just money moving all over these markets. We're seeing it intraday with different things that are going on in our markets, which is certainly, with that comes opportunities in some capacities. But I guess it's just the new norm here for a while, right?
I think so. I mean, we had, a 14 or 1,500 point range in the Dow yesterday. Massive moves. I not to keep saying the same thing, but I think volatility is going to stay quite elevated. I don't think this political landscape is going to change quickly. not only do we have war, we talked about we're completely blocking Spain from trade. So Trump's on a mission. I mean, he's going to try to put these, in his mind, put these countries in their place. You could argue rightfully so or not, but I think the whole, all these things with Europe and NATO, all these different relationships that we've had for a long time. I think realigning all those things and seeing where we fall, I think is going to be interesting to see. So, I mean, to Dustin's point, and just kind of going back to our markets, there is a reason D's corn made highs. I saw a lot of rumblings yesterday about, I think maybe one of the worst correlations was, beans, is what corn did in 2008. I couldn't think of a worse correlation in my mind than trying to relate those two things together. 2008, we were on a, ethanol mandate. We needed to pick up a billion bushels of new corn to meet, ethanol mandates every single year. Completely different than China might have to buy 8 million more tons, like uneconomically. Horrible correlation. I don't even understand who could pull that out of a hat. This is a matter of, does China have to uneconomically buy from the U.S.? That's fine. Short run, we could certainly run higher. We could do all those things. But it's not the same story at all. The world supplies have skyrocketed. Global demand has not kept up. One outlier might be some biodiesel demand here in the U.S., but there's no, in my mind, it's not even close to the same kind of situation that we had in 2008. So, to say that, crude oil is going to go to 150, so corn's got to go up. Well, if you think crude oil is going to go to 150, you should buy crude oil and make $80 a barrel instead of trying to say that corn has to go up because crude oil is going to go up. So I think there's definitely some running around trying to get pretty bulled up here. And I'm all for it. I think it'd be great for farmers to be, super bullish and rally, but I'm just not seeing it. But outside of like short run, funds get longer. Farmers are done selling for now, like small things like that. But we need to try to put things back into perspective. We have too much production in the world. Like we need a production shortfall, in my mind, to really have a sustained bull market from here. Not to be a Debbie Downer. I hope it all happens, but just to say, hey, look at this. Here's a chart from 2008. That'd be great if that happened. Not the same setup.
No, and I think you've been pretty clear in terms of, tempering your expectations, but saying, like there's a path, you could draw up a path to a friendly new crop corn market, but it's not a,
like I said, last week or so, like I'm cautiously optimistic and I think we have a good setup, but I'm also not delusional. I mean, I think there's setups. I mean, we're not talking $6-7 corn, unless people want to go, take all their money out of equities and put it into corn or something stupid like that. I just, trying to be realistic here. There's big crops, South America, big crops here. We've got good demand. So we're finding some support levels. We've got really good crop insurance. We've got good farm bill. We've got a good setup, I think, to have profitability opportunities for growers. And to Dustin's point, want to keep the powder dry because, if you did have a weather problem, those are all, if you had these things, you could have a good market. But just to say we're going to have a good market, I think is also foolish.
Right.
So.
Yeah. Being prepared to carve it out. It's going to take work. It's not going to be put in your lap.
Yeah. We're not like, oh, thank God that's over. Here's a 2008 chart. We're just going to look what that did. Yeah.
Right. Well, to be fair, your Purdue index did raise 3 points, Justin. So, I mean, the optimism's sitting there.
That's yeah.
They're watching our show.
Yeah. Yeah. I don't weigh in on that one. So
they don't call you for that one?
No.
Oh man.
Yeah.
Ben, what's going on in your world here this morning?
Not a lot. Looking at and listening to what Justin said in perspective, right? And it's easy to buy into whatever narrative you want that fits what you want to do. or what you would like. I think that this is when we get into these periods of uncertainty, and there's certainly a lot of geopolitical uncertainty, and you could draw this up in a lot of different fashions, is to maintain the discipline of where are you at this point in the year? What do you look like with with your current marketing, your crop insurance? Are you comfortable with it? And then from my perspective, I still stick to certain levels that I think are important, and uh, don't get caught up too much in the white noise of everyday trade. Markets will move up and move down, and they'll tell you what they want to do if you're patient with them. And right now, we're still just in a range bound kind of chop back and forth. We back and filled nearly everything from the report in January on this recent move. And I think you have to have some sustained strength in May above 453 to get any sort of extension. So,
Yeah, Ben, to that point, looking at like May corn, for example, we've been in a 420 to 465 or 70 range since last July. And we're at 443 today. I mean, it really has been just a big sideways chop.
Cash corn is traded in the East really within a 10 to 15 cent range the entire year since harvest. And same thing with charts. I do think the soybean chart looks good. There's no denying that. Wouldn't rule out a big setback. If you can get a setback and then take the highs out again, I think it's going to really frustrate some bears and go higher, but it could correct 30, 40 cents from here, and that could still be in place. So with volatility comes wider ranges, comes greater risk and greater opportunity. But I think that disciplined perspective is really important in times like this, right? We don't have a crop planted yet. We don't know what crude oil is going to do. Certainly feels like this morning, the angst over what's going on in Iran is a little bit subdued. So I think markets just breathe a little bit here and start figuring out where as we head towards the planning report.
Yeah, they were reporting this morning, the Pentagon gave a briefing, Ben, that we're going to control the air between Israel and the United States in like less than a day or so. We're going to have complete and total control of the air over there, which that's 4 days in, Yeah.
And the Navy. I mean, it's I saw a great thing on Twitter that made me laugh. And he said the Iranians are about to find out why we don't have free healthcare. And it's pretty impressive what we've been able to achieve it to this point.
Yeah, no, it's definitely been pretty crazy. Ryland, we got a couple minutes here. Let's move over to livestock. Pretty interesting. It was kind of a mirrored day, another day where we opened sharply lower and claw our way back, by the end of the day. Overall, pretty quiet on the hog side, but also wanted to see, with a lot of those beef exports and shipments moving through over there, our numbers are low. Any chance we pick up some residual business over here longer term, in your opinion?
Yeah, I mean, I think just the surge in beef is really interesting right now. We got choice up 671 yesterday, new high for the move. I mean, these are summer demand prices, so I think anybody that wants to sell beef in the U.S. kind of now's the time, right? With the prices just moving contra-seasonal, I think there's a good chance of that, especially, as we're starting to see U.S. dollar starting to gain like a little bit of strength. I think imports are really what's going to kind of maybe save this market, to some degree, without having to ration demand a much higher degree. So we'll see. I think just at this point, we haven't seen any cash trade right now. And the kills have been running very, very light. We're 6,000 head behind last week. And I think this is the big support. So I wouldn't be surprised to see import demand really kind of tick up here for this month, especially if beef prices can hold up in the interim. Packer margins looking a little bit on the more healthy side with this move in beef. So that's a good question. I think everybody's waiting to see if there's going to be if cash markets are going to slip here, just because of the big discount in April. It's just exceptionally wide for this time of year as well. It's almost at a $10 discount here. So I think that's everybody's going to be looking at that as kind of the focus right now, especially after seeing the liquidation in the April as of yesterday. So just waiting to really see how that kind of shapes up. I know there's been a lot of bottom picking on this break, but we'll see if this finally run into some support here. Back and forth trade in the hog side of things, really just, it still feels like this market has been much more resilient to the geopolitical concerns than pretty much anything else. It's just been back and forth, kind of a sideways trade the past 3 days, and we really haven't seen too much on the cash side of things. Cash has kind of made its move early, and now it just looks like it's unchanged, 98.5. But belly's still going strong here. So wholesale meat prices are just really kind of the focus at this point. Belly's up 151, and I still think overall that's kind of the big demand center right now in the marketplace. So it still feels like it's just back and forth. Market probably needs a little bit better news, I think, to break out of here. But seasonally, we know that we're expecting prices to stay pretty firm, and if not, just kind of see a little bit of a seasonal uptick with any kind of weather improvement, down the road in the next several weeks. So overall, I mean, like I said, just kind of back and forth here, waiting for a little bit of a breakout on them hogs.
Very good. Appreciate the update there, Rye. We just came into the open. We got May corn now down 3.5 at 443. May soybeans are up a quarter at 1170.5 is the last there. And May Chicago wheat down 6 1/4 at 567 3/4. Tomorrow morning we'll have export sales. They'll be out at 7:30 Central, so we'll take a look at those and visit about that in the war room. Also, we got a couple of links there in the comment section. We've talked about it ad nauseum, and we're going to all the way up through March 27th when the deadline hits for our AgYield NextGen National Scholarship Competition. If you are currently or know somebody that is enrolled in college with an ag-focused major, it's a no-brainer. Have them sign up. We're going to be playing for some significant prizes, and it'll be multiple scholarship opportunities for the participants that take place in the simulator challenge. So be sure to check that out. Click on the link. It's got more info and certainly how to register there. Also, if you're looking for a deeper dive into the things we talk about on a daily basis here on the War Room, check out the War Room Report. It's a really good portal for premium content that we put out and a deeper dive into all these markets with our thoughts and comments there. So check that out as well. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day. We'll talk to you again tomorrow.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content. All for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield NextGen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.